Okay, let me now welcome on board very quickly Pankaj Mittal, whole-time director and president at Samvardhana Motherson, and Gandharv Tongia as well, the group CFO. Gentlemen, hi, morning. Gandharv, if I could start off with you, your revenue hit a record of 35,244 crore rupees. How much of this was organic versus the recently consolidated Nexans and Yutaka Jaikin acquisitions?
You're absolutely right. This was best ever performance in the history of the company as far as revenue is concerned. The most of the top line has come from organic. The two acquisitions which you talked about, Yutaka as well as Nexans, these were consummated in the month of July. And from the second quarter of this financial year, these businesses will be consolidated and reported as part of Motherson Group.
And Gandharv, the EBITDA margin at 8.8% it's still below the FY26 number of around 9.5%. Is it raw material inflation that you're seeing, which is the sole drag, and when does the pass-through happen? How much of a lag do you see in terms of the pass-through?
You are right. If you compare the financial year 26 EBITDA margin with the first quarter, it looks the way you have read it. But the best way to compare our performances on a year-on-year basis, in the base of last year, June, the EBITDA margin was around 8.2%, and we have improved it to 8.8%. Directionally, all the businesses have improved its performance. On your specific question on copper, that's relevant for our wiring harness business. Generally, the pass-through is with a lag of a quarter or two, and we don't expect any significant change in the EBITDA margin on this business because of this lag.
Right. Pankaj, I want to get you in on the conversation because consumer electronics, your largest ever facility, is on track now for Q3 FY27. Tell me, what kind of revenue run rate can we expect once it ramps up?
GF3 is going on track, and once it's done by the end of this year, then we would be having a capacity of about 16 million units from this unit. That's the first part of it, and then we continue to spend on this. So we expect that on the consumer electronics side in the next 3 years, we will be spending about 6,500 crores.
And Pankaj, you've just incorporated a dedicated aerospace holding entity in the Netherlands. Tell us more about your plans in that entity.
Aerospace business is growing globally. We see a lot of traction from our customers, and we are supplying them multiple different products from different geographies. So the idea is to have the aerospace business in a kind of a division and have its legal structure so that we can continuously look at opportunities which the customers give to us in different parts of the world. So all the acquisitions and all other units which can come up in the coming times can be in the one significant vertical of the company.
Pankaj, the Vacuform acquisition completed via MSSL RSA, right? What does this really add in terms of capability and revenue for you?
It was a joint venture, so we already had partnership in Vacuform, and with this acquisition, it becomes 100% owned entity. We support, the polymer division supports many customers in South Africa. And it's been a very important part of our growth because we were asked to set up the first facility in South Africa by the car makers, and then they have given us more and more business, and we supply to now multiple customers there. So it helps us to consolidate, and it also helps us to provide the same solution to multiple different customers.
Talk to us about the order book as well. And Pankaj, I'll stick with you and give us a sense of the EV program. They're around a quarter of the order book. As EV, in terms of timelines, keeps shifting a little bit, just give us a sense. How are you stress testing revenue visibility on the EV-linked order book?
Yes, all the order books which we are presenting to you are based on the forecasts of the customers. So definitely, as you rightly pointed out, that the amount of EV which would have been considered some time ago would have changed. In terms of the new models which they're ramping up, we have been growing with the customers in every area. But more important to understand is that we are powertrain agnostic. So most of our products are powertrain agnostic. They go, whether it's an ICE vehicle, hybrid, it runs on, it's a EV platform. So that helps us to be totally de-risked and support our customers in all their projects.
Gandharv, your leverage at 0.8 times is at an all-time low, despite the active M&A, the Shenzhen Auto Creers, the Nexans, Yutaka, and Vacuform as well, all closing in quick succession. Tell me, where does leverage head by the end of the fiscal?
As you're aware, we have embarked on our seventh five-year project. By 2030, we want to achieve a top line of $108 billion. Last year, the exact number on annualized basis of top line was close to $23 billion. To achieve that 108, we'll have to make investment both in organic capacities as well as inorganic. As far as organic is concerned, we will invest around 6,000 crore rupees, plus minus 10%, in the form of capex in investment in plant and machineries. And as and when we get good opportunities and the BS of the customer, we will make investment in the form of M&A. As you mentioned rightly, Yutaka is one such example, and similarly Nexans. As far as our leverage is concerned, today we are hovering around 0.8, which is lowest ever, and this gives us the strength to make investment. In the subsequent quarters, we will continue to operate within the financial policies what we have defined for ourselves, and we can go right over 2.5x, which means that we have enough and more headroom available to make investments, both in the organic as well as inorganic.
And Gandharv, in terms of non-automotive, it's roughly 3% of revenue at this point of time. Given the strong growth in aerospace as well as consumer electronics also showing some strength, what's the realistic non-auto revenue mix in the medium term, or say by FY30?
Non-auto business is growing. Consumer electronics is a 1.5, 2 years old business. Aero is 4-year-old business. Already these businesses are sizable. Aero last year clocked a top line of 2,500 crore rupees with good EBITDA margin. And consumer electronics is also growing at a rapid pace. So in times to come, we should have contribution coming from non-auto business. But at the same time, auto business is also growing. The acquisitions which have done, the large ones are more on the auto side of it. So in terms of proportion, the growth should come from both the business in times to come.
Right, Pankaj, Gandharv, both of you, thank you so much for your time today. Good speaking with you. SAML, in fact, holding up almost 6% as we speak right now.